mode.
Hello and welcome to today's webinar. I'm Deanna Laird and I'm with Accounting Fly, and I'm happy that you're here with us. Excited that you're here to hear about some tax issues, specifically for the high-tech community, and we'll hear from the expertise of Annette Nellen. Before we get into the webinar, let's go over a couple of issues to make sure that you have a really good experience here. Hopefully you're hearing me just fine. But if you do happen to have audio issues throughout the webinar and you're listening through your computer, you might want to change over to your phone. It tends to be a little bit more consistent if you have an internet connection that goes in and out. And you can do that by clicking on the audio tab in your menu bar that should have popped up, and just select telephone, and it'll provide you a phone number that you can call in on. Okay? So that's really just if you have problems with the sound quality. We also would like to make sure that you're aware of the question panel in the same toolkit, because we invite your questions throughout this webinar. Annette's going to be speaking about a lot of topics here, some good, really good, important topics, and we anticipate that you may have some questions that you would like to ask of her. So again, we welcome your questions. I will monitor those questions and then ask them as Annette concludes her presentation towards the end of the hour. So go ahead and put them in whenever they pop into your mind so you don't forget about them. But just know that we'll hold those and we'll try to get to them at the end of the session. Okay? So we would like to know a little bit about you, a little bit about your background and kind of where you're coming from as you're joining us here today. So we're going to launch a poll just to get an idea of where you are in your accounting career, and this will help us understand your level of experience, and it will help Annette to know, maybe some important topics or things to cover in her discussion. So I see the votes coming in. Thanks so much. As you can see, we're looking at whether you're an undergraduate student at an advanced degree level, or if you're out there in the workforce already, but looking at how much level or how many years of experience you may have. So I'm about to close the poll, just FYI. Let me give you a few more seconds here to get your vote in. And I'm going to go ahead and close, and you will be able to see the results here. Okay. Hopefully that's sharing the results. So it's pretty much a split between master's level students and also those with 2 or more years of experience. So that's great. For those of you in the other category, if you would just ping me in your question panel what other is. I'd love to know your background and where you're coming from, so that you know what other means and what other categories perhaps I should consider in the future to get to know a little bit more about you. Okay? All right. So Annette, hopefully that was helpful. And
Yes.
Terrific.
Thank you.
All right, great. So let me introduce and tell y'all a little bit about Annette, because, boy, we have worked together before in the past, and I remember reading her bio about a year ago. It's like, wow. And I hadn't read her bio again until, in preparation for this presentation again. I was like, wow. So Annette, welcome. Thank you. Obviously an expert and leader in the tax field, so just pleased to have you here. Annette is a professor and she's been at San Jose State University for about 25 years as a professor, and is now the director of the graduate tax program, the MST program at San Jose State. And as far as the courses, she teaches tax research, accounting methods, property transactions, employment tax, ethics, tax policy. Before her time at San Jose State, she was with a Big Four firm, and then she also worked with the IRS as a revenue agent and a lead instructor. And, to add to all that background, just some of the things she's been involved in, I'm going to send you a link to her bio so you can read a bit more details. But, as an example, she serves as the vice chair of the AICPA Tax Executive Committee, and also she's testified before the House Ways and Means Committee, the Senate Finance Committee, and a few other very impressive committees and commissions on various aspects of the federal and state tax forms. So obviously, as I mentioned before, quite an expert, and we welcome your knowledge and perspective. And with that, I'll hand it on over to you, Annette.
Okay, thank you very much, Deanna, and welcome everybody. And it's glad to see so many folks participating today, and hopefully that the topic was of great interest. And also big thanks to Accounting Fly for setting these things up, because they have a lot of great resources, and I think really a great way to really bring a lot of folks together so far as schools, recruiters, people looking for positions. It's a really smart operation there, so glad to be connected with Accounting Fly. The topics today, we'll go to the next slide here. Three main areas we're going to look at here. What is high tech? We hear that term all the time. What does that actually mean? Then we'll also talk about what are a few of the special tax considerations for high tech companies, and not that we can spend a lot of time on that, but let's give you a high level perspective on this. And then today, we probably hear the term either digital economy or new economy, probably maybe a little more often than we're hearing high tech. And of course, it's all high tech because new economy, for the most part, is all involving primarily digital ways that we can transact business. And actually, in our MST program, we actually have a course, a 3-unit course on high-tech tax considerations. We spent a whole semester delving into many of these topics, and I'm sure the instructor probably tells the student, we're just skimming the surface here, going to give you the broad area, so that's what we can do in roughly 45 minutes, leaving time for questions, but hopefully give you a good foundation of thinking about these. Plus, all we want to talk about, if you want to get deeper into understanding these issues, which I highly recommend. I mean, this is obviously a direction of business, and don't think, oh, my client is like Ford Motor Company, so we don't deal with any of this. No, all companies are realizing that the world is changing so far as how people want to transact business. For example, just picking up Ford Motor, I think they have realized a couple of years ago that going forward, not everybody wants to own a car. Well, Ford still wants to make cars, so what will they do to still be a viable company going forward? They got a variety of interesting things that they have down coming in the near future. And I know that because I read my news updates like Wall Street Journal. I go in and look at the website. I look at press releases and all of that, and hopefully you're incorporating time in your schedule for all of that as well. So we'll just get into this first topic. What is high tech? So we can give a definition of that. Go to the next slide here, and then you can just go to the slide after that. The high tech. One thought we come to right away is, well, we're talking about R&D. We're in the laboratory. We're trying to figure out how to do something, how to make the next best, medicine for some particular disease, or to prevent something from happening, or how to design software that's going to do something better, or designing artificial intelligence. It's that, trial and error to finally get that product, or further refine our products, or get to the next version of the product that can do even more. Like how many versions of iPhone, for example, do we have? They all can do something more that couldn't be done before. Another aspect of high tech is that it typically does involve intangibles. Now, some of these intangibles, like patents, are really more a legal right, but we're also talking about software, know-how. That tends to be something common in the high-tech area, because even when we're talking about hardware or a tangible asset today, in fact, even including your car has a lot of software and technology in it, way beyond just, gee, what does this carburetor do? There's a lot of software running your car. Also, I think unique to high-tech is also this thought of, well, things change quickly. As soon as one product's launched, the company usually has already been working on the next version of that product, and it's just really a very fast pace of moving to the next activity here. And part of that is also tied to many things running on some version of semiconductor, and of course the speed of those, they just keep on making those faster and faster. That's been going on for a few decades, and perhaps will continue to happen. Next slide here. What do we mean by high-tech industries? And this is one way I broke them down. Now, certainly semiconductor manufacturing would really also fall within hardware. I just pulled it out because it's a pretty big piece all on its own. It's not just the making of the chips like Intel would do, but it's also making the equipment that makes the chips, such as Applied Materials, and so there's many other companies too in the U.S. and elsewhere. Hardware, it's a very broad category. That's computers, any piece of technology, your phone, many things fall into there. Peripherals, disk drives, storage units, things like that. Then software, today we probably also would put in the category of another type of version of software, of applications. That's a term we hear a lot, app, but it's some version of a software tool. Also, communications, internet. Companies have allowed this backbone of the internet to actually function so that we can connect to the internet. What does that actually mean? That's obviously a big part there. Then something that's really happened, I don't know if it really dates earlier than this, but certainly today, the company that would illustrate, wow, that was the start of web-based business, likely to be eBay, obviously very well known. That actually started in 1995. But from there, it was just a way of, gee, how else can we connect people who want to be connected using technology? Because that's what eBay is doing. It's saying you want to sell something or you want to buy something, we'll match you with someone somewhere in the world that also wants to buy that or sell something to you. I think from there, obviously, think about what Uber, Lyft are doing. It's building a business really based around connecting people through the technology of a website and connection to the internet. There's something we should include biotech, also mentioned in the high-tech field as well. The next slide is looking at, what are some of the common traits, and obviously it's a long list here. I won't go through all of them, but just think about what are common things. If you think of all these companies you would label into a high-tech environment, they certainly have high R&D costs. In fact, you've learned in your accounting courses that, on a financial statement, they can really lump a lot of expenses together. But if R&D is an appreciable amount, it's got to be separated out. And certainly for a tech company, you'd likely see a line for R&D. It wouldn't be lumped in with their other types of expenditures. They often have a low debt equity ratio. And then part of the reason for that is that it's a high-risk investment. So they're going to borrow money. It's going to be a high interest rate. Often they're finding other ways to usually bring equity into the company. So often a low debt equity ratio. In fact, you'll see some tech companies don't even have any debt, which certainly when you look back to more traditional, long-standing industries, that would not be the case. They've got a fair amount of debt. Worldwide markets and competition. I mean, if you're going to build cars and sell them throughout the world, you've got a big transportation issue and shipping issue to actually get those shipped, or where are you going to actually manufacture them and get them sold. Whereas you're designing software, well, gee, not as big an issue. There certainly are some laws that might prevent you from being able to, quote, export that software to certain countries, depending on what that is. So, but it's certainly a lot easier to, sell your software to somebody in a foreign country than it would be to sell your car that's sitting in your warehouse in the United States to someone in a foreign country. So easily get to worldwide markets and as well as the competition there. Potential for fast growth rate. Things just do move very quickly as they continue to develop and further enhance the technology. Often, kind of new frontiers, new ways of thinking of things. Like, if you, for example, think about in the biotech area where people can do a home test of your DNA and realize what diseases you might be prone to. Well, there's some good parts and there's some bad parts of that, and these new frontiers often raise and challenge some new ways of thinking and what we do want to know, where might the government need to step in and regulate. For example, you see that with Uber and Lyft, where, as well as Airbnb, where the local government, state governments are certainly looking at legislation to say, well, gee, shouldn't these drivers have some kind of background check, just like taxi drivers would, before they can drive? What other rules we want to put in place there? So it does certainly catch the attention of government. So just a few things, and I encourage you to take a look at this and think about some companies you would view as high-tech. But it's a list I've developed over several years, and just trying to add a few more things that would help describe these high-tech type environment. And on to the next slide here is, what's the relevance of some of these things? Well, certainly, what is as far as tax relevance? Obviously, there's relevance beyond just tax, believe it or not. Obviously, I spend most of my time thinking about tax rules. But what is the tax treatment, such as on income tax return, of R&D? And I'll get into that topic, but obviously that's a big deal. Also, not just for income tax, but there can be issues of sales tax, property tax, other types of taxes. How might that apply to forms of R&D, whether the R&D is fully developed, whether it's in process, and also, of course, these raise accounting issues as well, how to treat them on financial statements. Also, a tax treatment of once you've got the R&D or you've got a patent on it, what if you need to protect that? Someone is violating your patent, you're going to incur costs to protect that. Well, what's the tax treatment of those? Is that something you would capitalize as protecting your patent, or is that something just to protect your everyday business operations, something you can deduct? Also, in the tax relevance today is location decisions. A lot of jurisdictions, whether a country, a state, even a local government, really would like to have high-tech activity in their jurisdiction because it typically involves, you saw one of the traits was usually high-paid jobs because they're highly skilled jobs where you typically do need a college degree or master's degree in engineering to be doing a lot of engineering type or even a PhD. And those tend to be high-paid jobs in certain jurisdictions like that. There's often a good multiplier effect because, for example, if you're manufacturing chips in a jurisdiction, well, you obviously will have to supply the silicon and all the raw materials as what they call a multiplier effect. Other businesses will also be in the jurisdiction. And so to attract that, because it's competitive to try and get these businesses to locate in their jurisdiction, they're often offering a variety of tax incentives. Hey, we got a really high research credit that'll lower your income tax, or we'll give you some kind of a property tax exemption on your chip manufacturing plant and things like that. So there often tend to be some tax incentives of where these companies might locate or expand to. And then also something interesting about the location of these companies where, as opposed to widget manufacturing, is the fact that borders, for the most part, just are not that relevant. I mean, obviously, you got to put your employees someplace, you got to put your headquarters someplace, but there's not quite the same location issues of, like say, manufacturing and delivering cars as there is to manufacturing, developing software and having other people acquire that software, or even put the software someplace, like cloud computing. Cloud computing means that you're, in essence, in a very simple terms, you've got the software on your computers and people can log in and use that. Well, it doesn't really matter where those servers are located, and that does then challenge tax consequences because our tax system is very driven by where did the activity take place, where are the employees, where is the property, where is the customer, where is the salesperson. But for example, if some company had servers in state X and state X's tax rates went up and they thought, well, gee, we don't want this here anymore, they could easily move the servers, or likely they didn't even own the servers, they were probably leasing them. They would just go to some other jurisdiction and the customers wouldn't even know any of that had happened because location just isn't relevant to how you are going to get those cloud computing services. So location is certainly a relevant in many high-tech operations as well. Next slide here. So let's look at a couple of these special tax considerations. And just one here, let's talk about R&D costs. That's obviously a big deal. And this first tax rule here, but let me just go a quick overview and I'll get a little more into this code section 174 just to show as an example of this. And some of you may have certainly already encountered some of these rules in your practice or in your study of tax. But obviously, there's got to be some rules to help in identifying, well, how do we treat the costs of creating and developing this R&D? Now, some R&D turns into a successful product. Some R&D is not going to produce a successful product. So should you have to capitalize this cost until you know for sure? Certainly for tax purposes, there'd be a concern, well, gee, if you capitalize it and say, oh, it's only got a 2-year life, I'm going to write it off over 2 years. Well, the IRS might say, oh, no, it's going to have a longer life than that, and a lot of uncertainty there, right, because R&D does involve uncertainty, so that's got to be addressed, and we'll talk about that tax rule in particular. Then our federal tax law, as well as the state income tax in many states, has a credit in addition to some favorable rule usually for expensing your R&D, and these tax credits, the federal one is under Internal Code Section 41, and a little bit of a complicated provision, but obviously it's going to reduce your federal tax liability, something you want to take a careful look at and see the extent you can qualify for that. The rationale for having, for example, this research credit, it's only going to be available if you're doing the R&D in the United States. So something else obviously the government's thinking about, wow, this R&D work could be done probably anywhere. We've got a well-educated workforce. We want it to be done in the U.S., so you get the research credit to the extent you're doing it in the U.S. They say then state tax rules often have a variety of incentives. For example, many states do have some version of a research credit. You also have, I'm thinking about, what are the tax rules that govern this R&D type activity? Well, you have to have rules dealing with what about the cost of developing this R&D, or you might be actually acquiring, somebody else did the R&D or part of it and you're acquiring that. You need to have tax rules governing that. Then of course we need to have the tax rules for what about when you are transferring, and there's different ways you could be transferring this R&D, right? You could be licensing it, you could be selling it outright. So far as broad perspective on R&D, there's 3 broad categories where tax rules are necessary. Let's go to the next slide and I'll just talk a bit more about this code section 174. Again, just give a perspective of one that originally has been around a long time. Back in the early 50s, it was well known that there was disputes between the IRS and taxpayers as to how you would treat this, because the IRS, for example, would look at it and say, oh, R&D, that's going to benefit you for a long time. You got to capitalize it, then write it off over some long life. And companies were saying, well, it might turn out that it's not worth anything. It might be a failed product, or we don't know how long we'll use it. We should be able to take a very short life on it. Maybe we could just expense it in the same year we incur it. So Congress finally stepped in to address that, and they addressed it in a way that really did simplify. They just said, you expense it in the year you incurred it, so we don't have to have any debate about, well, how long will that last? Also, Congress acknowledged, well, that would also encourage this kind of activity, that you don't have to capitalize it and write it off over some period of time. The year you incur your R&D, the general rule is, under Code Section 174, you just expense it. Now, they'd also put an alternative. If you don't want to use that, you could elect to capitalize it, and then once you first realize benefits from that R&D, you would write that off over no shorter than a 5-year period. The Section 174 definition of what is R&D, that got a little bit complicated over the years, partly actually due to in the 1980s, there was a gap pronouncement on the treatment of cost to produce external use software. And the IRS, when they wrote regulations on the definition of R&D, pulled some of that, and it took practitioners to say, why are you pulling this gap definition? Congress never mentioned that, and they finally pulled it. But there is, if you look in the regulations under 1.174-2, you'll see how the IRS defines R&D. It really does tie back to what Congress was implying back in 1954, where it's R&D in the experimental or laboratory sense. That's what people think of as R&D. And also, just want to note, if you look at Code Section 174, it actually doesn't say R&D. It says research or experimental expenditures. That's why it doesn't say research or development, or never got changed to say that. That's, I guess, one of those mysteries of how tax rules come about. In defining what kind of research qualifies for the federal research credit, the first hurdle you have to cross is it did beat the definition of R&D under Code Section 174. Then there's some additional hurdles, as well as the definition of what is R&D is much narrower so far as the credit definition, and narrower in terms of what types of expenditures. The definition of R&D under 174, once you know that the expense relates to an activity that meets the definition of R&D, then it's everything. It's the labor, payroll cost, the utilities, the rent, whatever is all tied to that R&D activity. Whereas for the credit, the main item that goes into that is really just the labor, not the payroll tax, the labor cost, and some amount of supplies, though the labor cost is really the big element of what goes into a calculated research credit. And then Congress realized back a few years ago that, wow, if someone's getting a deduction for R&D and a credit for a big portion of that R&D, because a big portion of R&D is wage expense, that seems like a double benefit. And we're always short on revenue, so we're going to do something. We're going to say you have to reduce your research credit you have to reduce your research deduction by the amount of credit that you're claiming. I just note that because that's, in thinking about how income taxes are designed, that's not unusual to see that kind of a treatment, saying if you're also getting the double benefit, let's reduce your deduction by the amount of the credit you're claiming. Let's go on to the next slide. So I'm not going to go into the details of the research credit, though I will note that credit's been around since 1981. It was always meant to be a temporary revision, so Congress could figure out, well, is this credit actually encouraging more R&D to be done in the U.S.? And reports indicated that it was causing more R&D to be done in the U.S., but when they would renew it, they'd only renew it for a year or two at a time. But in legislation that was enacted in December 2015, they finally actually made the research credit permanent. That's a really major change in our tax system for high-tech companies, and so hopefully that'll encourage more to be done, because an issue that always existed when it was a temporary revision and you've got so many countries saying, hey, we got great tax incentives, come do your R&D here, would be, well, maybe we'll go do our R&D there because they got some longer-term incentive. We can budget that in and figure out what it's going to cost and reduce our costs. For the U.S., maybe the credit will go away. Who knows? It's always this temporary thing. We can't plan on it. So hopefully that will be a major change, that it is permanent provision now. Another code section I'll mention, this deals with if you acquired intangibles, and even certain self-created intangibles will be just, the law just says amortize it over 15 years. So for example, if somebody buys a tech company and one of the assets they have are some patents, those patents are going to have a 15-year life. Okay, let's go on to the next slide here. Another part, remember I said, is as far as thinking about technology, we think about what are the rules for developing technology, what are the rules for acquiring technology, then what are the rules for when we actually are ready to profit from it, we're going to transfer it in some way. Well, when you're transferring your technology, you might be selling it outright, you might be licensing it, typical for software, maybe you're leasing it, a lot of times they might use that term even for software. You also, in this transaction, something we see sometimes is that startups like, well, we don't have enough money. Well, they might get some venture capital funds, bringing equity in, but sometimes other parties, more established companies, might say, well, gee, I think we can also benefit from whatever this technology is that you're creating, so we're going to put some payments toward helping you to develop that technology. Well, then you got to figure out, well, what's actually going on here? Is this a partnership that's just been created? Whose technology does it really belong to? So that could bring up another issue here. Sometimes the transfer of the technology might be that they're donating it to a charity or maybe a university or something. Then also, we won't get into it, but there are some special rules regarding if there's a transfer of intangibles in international context. Let's go on to the next slide here. Okay, when you are transferring that property, and just to give a quick example of how tax consequences can come into play here, let's say you've transferred this technology, you're receiving payments from a customer. You do need to figure out, well, have I actually sold this outright or have I licensed it? Because it does make a difference tax-wise. I won't go into the details, so we're just making you aware of some of the rules that come into play here. The timing of when is that income reported? Or if you've actually sold the asset, generally you're going to pick up all of that income at the time you actually sold it. If you're licensing it, you're generally picking it up as you receive those or have earned those license payments. And then the context of the example where I said, well, gee, what if somebody is giving you money to help you develop that product? You really got to look at, okay, well, who's really at risk of this R&D, because they're typically the ones that's going to get the 174 deduction. Was there actually a partnership formed? Should they be forming you're founding as a partnership? When would that payment be reportable? It could be that if this third party comes in and says, well, I'm going to help you develop this technology, here's a big chunk of money, so you have the money to further develop it, and then I'm going to license it from you. That actually might just be an advance payment of revenue, which would be taxable when you receive it. So a variety of things. Very important to always understand what exactly is the nature of this transaction. One area for the last few years which has raised a few questions both for income tax as well as sales tax purposes is cloud computing. What is actually going on? You've got some software up in the cloud and I'm paying you something that I can go and use it. Am I paying you for a service? Am I paying you for a licensing of that software? And it does make a difference tax consequence-wise as to what is the nature of the revenue. For state tax purposes, what state is that income supposed to be taxed in? Is it the one where the employees of the company are located? Is it the place where the customer is located? But the really key thing is to understand what exactly is this transaction, and to understand the transaction, a lot of times you have to get in and get a good understanding of what is the technology involved here. What does cloud computing even mean? Look at the contract between the parties. Has there been actually any transfer of an asset? That's come up with sales tax purposes. Typically for sales tax, unless there's been a transfer of an asset, there's no sales tax. Now some states do tax services, and more will probably start adding taxation of services. But if there's been no transfer of something, under many state sales tax rules, you just can't tax it. And some states were puzzled saying, well, before you actually used to buy the software and we charge sales tax. It should be the same thing. Now, just because you're using it while it's on the other party's computer, you're still, the end result is you're using the software. We should tax it the same. But the law doesn't necessarily follow that regard. Typically, you need some kind of a transfer that there's going to be sales tax involved. And of course, the state laws continue to evolve as they don't want to see their tax base dwindle as things move from the sale of software to the lease of software. All right, let's go on to the next slide here. Let's talk, a few additional things here very briefly. Again, the location of where your products are can be relevant so far as taking advantage of incentives. And of course, there's a lot of non-tax rules that come into where you're going to locate your operations. Also, the form of entity. Are you going to be a partnership? Are you going to be a C corporation? If you're a C corporation or your corporation, could you be an S corporation? Obviously, a variety of tax rules come into play there. A lot of times you also hear with tech companies, oh, one great incentive they have for getting employees is they offer them stock options. Well, why do they offer stock options? Well, one big reason is that tech companies have to spend so much of their money poured into the R&D, they might tell the employees, well, maybe we're not going to give you a really super high cash wage, but we're going to give you a reasonable wage, and we're going to promise you these stock options. So also, the harder you work and really develop a great product, our stock might become quite valuable or get acquired, and it also helps preserve the cash, right? So we give you equity compensation. Well, if you're going to give equity compensation, the best way the employees understand that is that you're a corporation. If you instead tell them, oh, you're going to get some measure of some kind of something tied to a partnership that's not understandable, they're going to say, well, I think I'll go to some other company that's going to give me a stock option. Okay, let's move to the next slide here. Okay, as I mentioned today, you probably hear more of the term new economy or digital economy as opposed to high tech, but we go kind of broad here. Let's go to the next slide. What do we mean by the new economy? I think the digital economy means something dealing with, or we need software and computers. That's how we're transferring things. New economy type activities where new businesses have actually developed, like Uber, Lyft, TaskRabbit, where they're sort of new businesses. You might think, well, Uber and Lyft, we always had taxi companies, yeah. But we have a few new companies. I'll get into that a little bit further. Also, I think just new ways of thinking. Let's move on to the next slide there. Okay, so the digital economy, and you can see the rest of the slide here. In thinking about this, I've written articles on this, how do you even think about it and how do you figure out what the tax consequences are. I put it into three types of activities in the digital economy. The first one is you might actually be transacting business with a digital item, such as virtual currencies. I'd put that in a category by itself because you're not necessarily buying a virtual currency. You're trying to transact business using that as if it was the equivalent of cash. It's not really a currency in that no government says, hey, that's our currency. But a very interesting area, and I think we're going to see probably further use of virtual currency, or at least some of the technology connected with that, such as the blockchain. If you don't know what I'm talking about, the blockchain, go research on the blockchain. That's going to be a big deal so far as the ability to transact business without a third-party intermediary. Instead, it's all done with software and trusted parties maintaining the software and all of that. But IBM's got big projects looking at it, and as do some banks and others. The second way that we have activity in the digital economy is that you're actually providing digital goods and services. So you're not, selling a car. You are selling something digital. Here's software. Here's, cloud computing services. Here you can do online gambling, but it's all being done obviously in a digital form, right? We don't have tangible items. Talking about digital goods and then services being delivered really electronically as opposed to someone sitting across from you delivering services. I put that in a category there. And then the third category says transacting business enhanced by this internet and digital technology. And it might be that you just set up your own website and you're promoting, yes, hey, I'm selling my shirts that I make at home, right? Great. That's a business enhanced by the internet, because you could also just make the shirts, go rent a store space and sell them, but the day you're thinking, wow, I'd reach a much broader market and probably have lower costs if I could actually just go online and sell them through my website. Like eBay would be a good example of that, selling as enhanced by the internet. Then of course we're seeing today these web platforms being used to help match customers. I mean, we've obviously had eBay, which is really matching customers and sellers. Now we've got it much broader where it's provision of services. And we got all kinds. We have face-to-face. Amazon's had for several years now this Amazon Mechanical Turk. And there's also Upwork, where they're saying someone's going to give you services digitally. You're going to give them some assignment. They just, on their computer, they do the whole thing. And then we've also got enhanced by the web platform, rentals of property like Airbnb. The concept of what Airbnb is doing is not new. I mean, years ago, if you had a spare room to rent, you'd go put a little index card down on the bulletin board at the grocery store or wherever you could do that and hope somebody would see it and you'd be done. Well, today, to do that electronically, you're going to reach a much bigger market. Payments can be handled electronically, so just a far more efficient system. So I think, this is my view of the digital economy. I'd put it in these three categories. I think everything falls into one or more of those categories there. On the next slide here. As far as new economy activities, it's a long list here. We can think of a variety of things that might fall into here. Obviously, e-commerce would be like eBay and a few others that are trying to just match buyers and sellers. We got cloud computing. We got online travel companies, right? You can just go on and they'll, again, using the technology to say, hey, we can bring all this together and you just tell us where you're going and what days, and we'll find a whole choice of airlines and hotels for you and rental cars and match it all up and take care of that for you. Freelancing, also in this category, actual new technology such as 3D printing, use of virtual currencies. And while sometimes when I'm talking about new economy activities, I didn't put it on this list because we were focused more on digital, but a new economy activity today I would also say is actually marijuana operations, which are becoming more prevalent in the states. We're going to see more states perhaps moving to recreational use. And it's kind of a new economy activity because something wasn't, in the old economy it was done a different way, but that brings up a variety of tax and ethical issues as well, since it is still a federal crime to use or transfer marijuana. But I put that in new economy activity. We've got actually a conference coming up in this June on for practitioners, helping them navigate taxes for new economy clients. And yeah, one of the topics we're talking about is what if your client is someone in a marijuana business. Go on to the next slide here. All of this also brings up, I think, some new thinking and just how we do business, right? When you're talking about, well, the business just operates online, or you know, you can. You're going to use cloud computing. Well, cloud computing doesn't have to be a 9-to-5 activity, so it's really changed how businesses operate. Also, low barriers to entry. What's it take to log on and say, hey, I'm going to be making some money. I'm going to be a tasker for TaskRabbit, right? I think, you know, it's more of a 24/7 model. People might like that, saying, like you hear this all the time from your Uber or Lyft drivers, hey, I can set my own hours and it doesn't have to be the same. I can even kind of figure out when surge pricing might be in there, just go in and drive during those periods and all of that. It's also interesting, there was just a hearing in the House Small Business Committee in Congress this week looking at some tax issues that people like Uber drivers or people working for TaskRabbit might face. And one of the themes coming through in this hearing was, well, gee, these people don't understand taxes. And, you know, here they're and they kind of almost like blaming the IRS for not explaining them to them. But part of it, I think, was the low barrier to entry. You know, let's say you're deciding today, well, I think I might open a restaurant. We'd probably do a lot of research, but you might even go take a class of, gee, how do you operate a business? How do you find customers? What are some of the laws I have to deal with? Where you have to take care of all of that. Today, these low barriers to entry, oh, just log on and guess what? You're a driver for Uber or Lyft, you're a TaskRabbit, and they treat them as independent contractors. That still is under litigation. And at some point it will be under litigation perhaps with the IRS, though that also might just be resolved. An audit will never know what happens unless the employers tell us. But those individuals had not really thought ahead to think, oh, I better figure out how I operate a business, and then I'll go become a driver and use the Uber and Lyft platforms to find customers. So they really haven't done a lot of research on, gee, what are the tax consequences of all that? So it's just kind of an odd thing. And perhaps some people think maybe these freelancers, maybe you're in a category kind of between an employee and an employer. Also, I saw a news story today that, you know, the owners of the web platform, you know, TaskRabbit, Uber, while they could help teach the drivers or the taskers about their tax consequences, they don't want to do that because that helps more indicate that they are your employee, not a contractor, because you're helping them to do something that if they were really in business for themselves, they would have figured out on their own. But it's something still to be worked out. If you want to, you know, learn more about that, go to the House Small Business Committee website and you'll see these hearings. There's actually 2 hearings this week. Also, in these kind of digital operations, you're going to have multi-jurisdictional taxpayers. Like, say, I'm making shirts, and old model was, well, I'm going to go sell them at the store. I'm going to have my store and sell them there, and everybody walking in, I just charge them sales tax for San Jose, California, because that's where my store is. Well, now that I'm selling them online, gee, maybe I got tax obligations in some other states or countries where I've got customers. Just things to look at. Okay, next slide. And I think another thing, you know, as this evolves, laws will continue to change, because sometimes we're seeing laws that there was one proposed in California, it did not go anywhere, but the proposal was, oh, we think that a local government should not make a homeowner renting their home or room on Airbnb have to collect the transient occupancy tax, otherwise known as a hotel tax, unless they rent out like for more than 90 days or something. I thought, well, yeah, that doesn't seem right, but, you know, doesn't seem fair to hotels, but hotels don't vote, but people owning their home renting out on Airbnb, they vote, so it just gets a little different perspective. Also, I think it's very attractive to young people today so far as being, you know, freelancer type, because just a different way of operating, a little more freedom in setting hours and things like that. And I think people just want to see more uses of these technologies. You know, easier ways to do business. You know, if you haven't seen this on Amazon, they sell these like, you know, little buttons for all kinds of products where it's just all programmed. You just, oh, I'm running low on laundry detergent. Hey, hit the button, and it's going to automatically get delivered by Amazon to my front door. Then for your pet food too. You just got to train your pet to hit the button. Next slide. Okay, I won't spend a lot of time on this when I get the Q&As, but just a few additional things that even governments have to think about on how this affects their operations. Should they be modifying laws? Should we have a new set of rules for the treatment of people who fall between the category of employee and contractor? Because many people say, well, gee, you know, as a contractor, they're not getting benefit of, you know, the Family Leave Act, they're not getting unemployment compensation, and they want to have that. Maybe they just need to modify the law. So many of these things also cause governments to think, well, maybe we need to rethink how our laws might be outdated, and we need to update those. We'll move on to the next slide here. And this is one example on this next slide of, you know, Airbnb saying, hey, you know, we're a big operation here. Look how much we are helping to expand the local economy, because some of these rentals wouldn't have otherwise taken place. So we're bringing spending into the area. And they've got actually a good number of studies on the Airbnb. If you go to their public policy blog, they've got a variety of things posted there. Next, how are legislators working on new economy? Yeah, well, certainly looking at how might existing taxes not be getting collected. Like, obviously eBay creates, I won't delve into this, but you can look this up easily, where there's a lot of uncollected use tax. People should be self-assessing. For example, if I buy something from a book from somebody on eBay and they don't charge me sales tax because they're not in California and they're not obligated to collect California sales tax, but I, as the buyer, need to self-assess use tax. So all these do bring up a variety of tax issues for governments to try and figure out. So let's go on to the next slide here. And then this is also obviously getting international attention. The G8 a couple of years ago said, hey, we're concerned with something they call BEPS, which is base erosion profit shifting. And this would be something that's easy to do when you're dealing with the sale of intangibles, or like how does Google make money? Well, Google's not selling something tangible, but they're making money through a lot of advertising on the website, through a variety of other avenues. And because it's not the same as like selling a car that crosses your border and easy to track all the tax consequences, they can say, well, no, our operations are actually in another country, and the revenue doesn't go to France, where these users of Google are. A lot of it's going someplace else, and that's a concern that these countries looking at. The final report was issued on that. With that, actually, why don't we go to questions, and while you're thinking of questions or typing them in, one thing I do want to stress is I really highly encourage you, just if you're even new to your accounting practice, or you're looking for a job at some point and you think, well, gee, I don't know what Bitcoin is, I don't know what the blockchain is, I don't know exactly how these web platforms work. Take the time to find information. In fact, go to these company websites. They usually have, how does it work? Or they have about our company, or they have terms of service. And take a look at these things. There's also a good amount of reports. For example, the International Monetary Fund has a report, Virtual Currencies and Beyond. IBM, you can get some information about the blockchain. McKinsey & Company has a report, Digital Globalization, the New Era of Global Flows. The OECD, Digital Economy Outlook. World Economic Forum, a report called Deep Shift, Technology, Tipping Points, and Societal Impact. Also, the World Economic Forum has a report, The Fourth Industrial Revolution. I encourage anything, new economy, Fourth Industrial Revolution, blockchain. Learn the basics of that. It's going to be a direction going forward here. With that, I'll start taking some questions.
Okay, great. We got some already. And
okay.
As I'm reading these off, I just want to remind everyone that you can type in your questions in your question panel, and I'll monitor those. I first want to start off with a comment, because this comment came through when I was thinking the exact same thing. So someone wrote in verbatim, wow, tax rules seem to get complicated year by year. And I guess they have to, since there's so much change in this area.
Yeah, and really it's, you say, why are taxes complicated? Yeah, some tax rules themselves are just too complicated. They're giving you too many, here's a general rule and a bunch of exceptions. That makes it complicated. But a lot of times it's the transactions are complicated to figure out, or they're crossing a border. That raises additional issues.
Yeah. Well, here's a related question. I mean, since there is this complication and there's so much change, as the laws are evolving, right? I guess part of this is timing, but how do you best advise clients in their business decisions when there's so much evolution and change?
That's a good question. Certainly, I think getting a sense of what is it your client, because they got some new idea, they're going to try and get funding for it. Many things I'll talk about up front is what is it you're trying to do to kind of get a handle of, gee, where you're sitting right now. You're sitting in Arizona and you're in the United States. What would these rules, tax rules, be? They'd also probably want to look at, so far as might they get some benefit being in a different jurisdiction? How they structure their business? Should it be, as a partnership? Are they better off being a corporation? How will they get equity funding? Today, for example, something that Congress has made permanent is something called a qualified small business corporation, where if you meet that definition, you have to be a C corporation, and you're issuing original issue stock. If those individuals hold on to that stock for over 5 years, sell to the gain, there is no tax consequence. It's a great way to get equity in. So getting a sense of, gee, how will I get the equity and what are the tax considerations? What is this product and what will be the tax treatment of the cost of creating it? And then when I distribute it, what are the different forms I could distribute it and what are the tax consequences? Why have it any special reporting obligations? For example, Airbnb, they have to issue their people who they're transferring payments to, they have to issue them a 1099-K. Well, that takes technology to make sure all that's in place. So just trying to get a really good sense of what all are your plans, and then being aware of, what are the rules within different states or perhaps different countries where you might have customers as to where you may want to start your business.
Okay. I think this next question came through about the time when you were talking about cloud computing. You gave some of those examples. And again, pointing to the complication, do you recommend that someone who wants to specialize in this area gets special training, perhaps software training as an example?
If your focus is accounting, I think how much you already have to know so much accounting. How much further can we go? But I think so far as you're understanding what the technology is, if someone says to I'd say if someone said even to an undergrad today, oh, talking about cloud computing, they say, what is that? That's somebody, I think, indicating you're not really keeping up to date on reading the Wall Street Journal and Wired magazine, whatever, Fortune magazine, whatever else that's out there, because there's always articles on this. And plus, it's so easy. And we know if we ask some student, hey, when's this movie showing? What's the closest theater? They can have the answer in a minute. Well, can't you look up cloud computing or whatever these things are online as well? There's a lot of really great resources. So far as familiar with the technology, I mean, if you think about it, how you're using your email is probably cloud computing. You ever wonder, where's my email stored? It's up in the cloud somewhere. Some of the technologies, that might make sense for your use, like Dropbox, and I'm not selling any technology here, but just as an example, kind of get a sense of, well, how does that work? Or if you don't really understand, how exactly does my email work? Well, how do I get this, Google Mail or Yahoo Mail, how is that actually working? If you set up a group, how does that really work? Perhaps, like, if you've never done anything with virtual currency, what would it take to actually use Bitcoin? Can I get a basic understanding? So some of these things, where it makes sense, you can easily try it. Yeah, go ahead and do that. In your tax classes, if there's some kind of technology available, like a lot of undergrad classes, they've got tax prep software with them. Think about, well, gee, how is that actually working? Or a lot of times you're using this actually where the software is up in the cloud. So don't shy away from learning about these things. It's easy to go to a website. I've mentioned a few reports about kind of more of the broad economic perspectives of this. But yeah, make time to do that. But always certainly make sure, whether a student, well, we're always students our whole lives. We always have to be learning new things. But make sure you are, finding some daily way to make sure you're keeping up with business activity, so far as Wall Street Journal type, Fortune, Wired, and maybe check out some of these tech magazines as well. If you've never used Uber, maybe download the app and see if this, assuming it's in your area, see how that works. Talk to the Uber driver. What do they think about this technology?
So it sounds like you're recommending always be exploring, kind of asking a variety of questions, right?
Right.
Okay.
Right.
Yeah, in your response there, you mentioned Bitcoins again, and you referenced them in your presentation. And during that time, someone had a question or a comment about the Bitcoins. They said, I thought Bitcoins were treated like property. So is that the case?
Yes, actually, the IRS did come out with a ruling, now it's escaping, I think it's Notice 2014-21, where they said, yes, it is property. And why they came with that ruling is the thought was, well, gee, is it treated like foreign currency? Because there's special rules in the tax system on how you treat foreign currency. But as I noted, it's really not a currency as we use the term today because it's not backed by any sovereign jurisdiction, right? It's not some country saying, hey, that's our currency. So the IRS said it really is property. So when you do use Bitcoin, and I oversimplified. I know as soon as I said that, so I think I just oversimplified something. Because yes, when you use Bitcoin, the IRS is saying, I go, let's say I buy a cup of coffee and I pay for it with Bitcoin. I just did a barter exchange with the coffee shop where I gave them Bitcoin and they gave me coffee. So I actually had to figure out, okay, that Bitcoin, let's say or whatever virtual currency, because these dollar amounts won't make sense, but if my virtual currency, if I'd originally acquired it on a day it was worth $1, and the day I use it to spend coffee, it's worth $3, I just had a $2 gain, because in essence I sold my Bitcoin in exchange for a cup of coffee. If my basis in that virtual currency was $1 and what it was worth, I got a $3 cup of coffee for it, yeah, I got a $2 gain. So yeah, there's a fair amount of tracking. Again, there's also some software tools to help you in doing the tracking of your use of the virtual currency. And again, you can dig into, well, how was that created? Why? How does that work? Why does that exist? And also, of course, it's just I think a variety of opportunities out there. That's why you see a lot of entrepreneurs out there all of a sudden becoming, I guess, hopefully wealthy business folks.
Hopefully, right? Okay, you reviewed some periodicals and newspapers that you recommend for keeping up with business or technology issues. What about tax laws? What are the resources that you recommend to focus on to keep up with tax laws changes and also maybe what's coming down the road?
Yeah, good question. Well, one thing, a lot of state tax departments, they'll issue private rulings and they post them on their website. Virginia, Colorado, New York are good examples of, if you just even go into like Colorado Department of Revenue rulings, you'll see a page where there'll be a variety of things, and some of them, a fair amount of rulings in the last few years regarding some aspect of cloud computing. You might see a few dealing with some kinds of virtual currency. Also, tax periodicals, if you've got any access to those of you who are working in a CPA firm, you probably have tax notes. Other periodicals, there's often articles in there with references to laws or pointing out sometimes where the laws might be inadequate or in need of some change to better address the technology. So those would be some good sources. There's good Google searches for that, where you'll find, make sure it's a reliable source you're getting to, but something from a law firm, accounting firm, or an academic doing study there, or some kind of a think tank would be good places as well.
Okay, and someone just posted that I suppose that the firm that this person works at says we have quick finders or books that have basic tax rules. So I guess,
yeah, as far as the tax rules, of course, always the best place to go is actually to the law itself. Okay. You go to the Internal Revenue Code, regulations, court cases, but sometimes it's trying to figure out what exactly is the transaction, so then I can see what law tax rules apply to it.
Gotcha. Okay, one last question which I can actually address because you have provided me slides to share, but for those of you wondering if you'll get a copy of these slides, yes you will. I'll send them out when I send out the recording of this webinar, and that way you can review this, share it with your colleagues, your friends, and you'll have the slides as well. So Annette, thank you so much. I mean, what a dynamic area.
It's exciting. I mean, this is where, those starting your careers, this is going to be a big part of your career. It's not going to be, dealing with widgets. Maybe we'll even stop saying widgets at some point. But it's an exciting area. But, get in, learn the technology as best you can. Not that you're going to be an expert, engineer, but familiarity and kind of a comfort. What is this transaction?
Yeah, makes sense. Thank you so much. And
you're welcome. Thank you, everybody. Good questions.
Thank you, everyone, for being here. All right, take care. We'll see you soon.